Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Wednesday, October the 20th. The year is 2021. Let's talk trading. High-low analysis part 3. Just like parts 1 and 2. This video is for educational purposes only. Your results may differ from mine. So let's just get right into it today. And I've got a 1-hour chart up. And you can see how all these highs and lows have been taken out. And so we've got this distance between here and here. So price is going to range between these two lines until it breaks out. I mean, that's just an obvious statement, right? But the question is, how can you use that to help you in your trading? Well, that's when you start to do your analysis. So for the current bar, current H1 bar, you can see we've got almost 15 pips of range here. And see here, range says 15 because I don't have the extra decimal. This is the old TRO range gauge. So for those of you who didn't donate in 2020 and you need a range gauge, there's the freebie, the range gauge. I wrote that, I think, back in 2008 or 10 or something, long time ago. So you can see that close minus the open is now, minus 1.1. So we're below the open. High minus the open's 8.9 and open minus the low is 5.9. So you can see we actually broke out of the previous H1 high. So knowing what the average range is, in this case, over 24 bars, 16. And you can see what the current range is 15. It's pretty much run its range. So it went up, it went down, or it went down and went up, doesn't matter. Point is, it did break out of the previous high by 2.5 pips. High minus previous high. So there was an opportunity to grab a quick 2 pips. Then coming back the other way, open minus low is 5.9. So if you would have traded short at the open, there's an opportunity to grab 5.9 pips. So analyzing these highs and lows in conjunction with the range, you can say, well, this candle's pretty much ranged out. So now it's just going to oscillate in between here. We're almost at the top of the hour. And I think we might even have enough time to see what happens next hour a little bit. So that's just one of the ways to analyze the highs and the lows. You look at them in relation to the range and whether or not they're going to move. So if you look at the last hour, you can see here it took out the high and then some. It took out this high, this high, this high, this high, this high, and this high. And this high and this high. It just wiped them all out. So down here in the fractal radar gauge, it'll tell you how many highs you had at these different levels. So here on H1, we're sitting at 38.15 right now. So we had a high somewhere at 38.16, one at 38.17, one at 38.18, one at 38.19. So that's basically saying, you know what? There's a bunch of, you could consider that resistance or sellers or however you want to say it. But obviously, price came to this point and reversed. So when you're trading and you know this, well, you can either see it on the chart or see it in a display. It's like, wait a minute, price reversed from this area once before. If you're in profit, maybe you want to take some profit off the table or take the entire trade off the table. If you're thinking about entering a trade, you might want to think, maybe I don't want to enter there because price is reversed there. a number of times. Then, of course, it could be like the stone cutter where it hits it, 5, 6 times, 600 times, and on that next hit, the stone gets cracked. So sometimes that's what happens with these highs and lows here. So you can see we've got one at 30, say call it 32, and another one right there about 32. So price tried to crack this, and it failed, and it came back down. And actually, price is just about done what we like to call coast to coast. So you can see here from the in the ATR range, you take the low, add the ATR to it, and so from this low, this is where the ATR range is, and then from the low, actually from the high, you subtract out the ATRs to get this range. And you can see before price pushed up, the ATR range was here, and then it came all the way down, made the low. And so what happened was, this box was pulled down. It's basically going coast to coast. That's what we like to say. So it came all the way from the high, all the way down, made new lows, and came all the way back up, made a new high. Coast to coast move on the pound. So right now, looks like we're trying to break out of that previous high. So right now we have a high of 24. We've got about 6 or 7 minutes left in the bar, and we'll just have to see what happens. Let me expand this out. Also, just in the old rain gauge, it had, the wick percent, that's the upper wick, the tail, that's the lower wick, and the body percent. So you can see what percentage of the range those 3 different sections of the candle, the sizes of those 3 sections of the candle. And then one other thing is we have the retrace percent, which you can consider it the fib numbers, except I always put 0 at the bottom and 100 at the top like a thermometer. And I've been told numerous times that's not the way to do it. But as I've mentioned before, I play by my rules, not other people's rules. So you can see basically we've had a pullback of what, 29%, just about, a little bit more. And back in the old days, before I wrote the frequency distributions, I was using the average, but as we know, the average can get skewed really bad, especially if you have one huge bar or a couple of huge bars or a couple of tiny bars. So that's why I prefer the frequency distribution. And then just to know where price is in the percentile of that frequency distribution. So over the last 100 H1 bars, you can see open minus low right now is about 50%. But the close minus the low is at the 79% level. So chances are you'd think, well, don't know if it's going to go much higher than this. It could, but we just don't know. And you can see high minus close, 3.2 pips is at the 32 percentile. So usually you could say, yeah, somewhere between 1/3 and 2/3 of the way is what you can expect on any given bar. And I know you could say, well, do you really do all this when you're trading? Well, yes and no. There's some things I look at, some things I don't. And it really depends on what's going on. If I'm in a trade, I'm looking at price. I'm looking at, how many pips up or down. I'm looking for signals to exit or signals to stay. But if I'm waiting for a trade, in other words, I'm sitting in a trade or I'm waiting to get into a trade, then I can start to look at this and say, nope, you know what, I better wait, um or yeah, I can go ahead. In fact, I got caught, I believe today, somewhere here. I took the trade, I think before the H1 closed, and then it tanked on me. It was just like, and then it came back. So I got out, should have stuck, because then it, like I said, it went coast to coast. But that's a little hairy hindsight. But the main thing about the high-low and analysis is you can play the break of the high or low of the previous candle, or you can trade the retracement, between the high and low of the previous candle and of the current candle too, for that matter. You can see here we broke out of the wick zone of the previous candle, the top and the bottom. I'm sorry, the top and the high. So high minus previous high, 2.5. But so basically the close and the open are pretty much the same. So close to low was 12.7. I'm sorry, that's what it is now. This was open, the low was 5.9. So there was chances if you wanted to take the wick zone trade to make it on both sides of that candle or both sides of that wick. I'm trying to remember. I think there were some questions out there, but I think I answered them on the YouTube. So hopefully those traders will see my reply from yesterday's video. And also time of day, it's just about noon. Now it is noon over here in New York. It's 9 a.m. here on the West Coast. So you can see now we've got a new range for price to break out of. 24 on the high side, 09 on the low side. So once again, you can see we hit that ADR, the ATR zone, and reversed. We're in the upper wick zone of yesterday's daily candle. You can see here with the wall mall, we opened just above 20. So that 20 would be a wall mall short. In the highest low, lowest high trade, you can see there was a 2-ball put in here, calling a short at about 22. Even though you didn't have a red candle there, price put in and reversed. You could have taken that short. Once again, the wick zone. And for the pivot traders, you still haven't taken out the weekly pivot. So, fellow traders, if you have any more questions about the high-low analysis, feel free to ask. And always remember, never forget, when you're at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.